What's up guys, it's Nathan here. Are you thinking of buying a property in Australia? This deep dive in the emerging trends and predictions from leading industry experts might reshape your perspective. CoreLogic, a property data and analytics company, believes that apartment prices might rise more than house prices due to the demand and fewer apartments being available. The company's research director, Lawless, says that this increase could be due to lack of apartments, more rented properties, and increases in rents. Lawless thinks that high house prices and difficulties getting loans approved might make more people, especially those looking to buy for the first time, turn to apartments. This change could help these people own a property and avoid rising rental costs. Steady numbers of people moving to the area and the number of foreign students could keep the demand for apartments high. Lawless also predicts a significant move towards apartments. This change could be more notable because there aren't enough apartments being built, which means there could be a shortage in 18 months to 2 years' time. Leigh and Aiden, Mayne, property market experts at JLL, agree on this point. They pointed out that even though property developers are positive about the demand for apartments, increased costs of building and financing are stopping them from building bigger apartment projects. This could extend the lack of apartments. They also think that if more people want apartments and the population grows more than expected, there might not be enough apartments available, which could lead to rental shortages and keep prices high. There aren't many apartments for sale, which means developers can charge more for each square meter. This is particularly the case with high quality properties for owners, and the trend is gradually moving towards mainstream products. And if you find value in this video, please consider hitting that subscribe button, as it really helps out the channel. And a big thank you to all our subscribers for your support. Inspires us to create more content we hope you enjoy. Historically, houses have been a better investment because the land value increases in value much faster than a unit does. However, apartments are starting to outperform just as well. Over the past 10 years, house prices have increased by 5% per year on average, compared to 3.4% for apartments. But in the last 3 months, both houses and apartments in the biggest cities have both gone up by 1.4%. As houses become less affordable and more people are returning to work and in study in person, apartments have been more stable in value during the recent financial difficulties. Lawless highlights that more first homeowners are choosing apartments. The affordability of apartments and the cautious approach of lenders to loans with smaller deposits and high debt to income ratios seems to make apartments more attractive to buyers. Recently, the growing demand has pushed up the average apartment price in Sydney by 2.3% and just over 1% for Brisbane and Adelaide. However, prices in Melbourne, Perth, and Canberra only went up a little, while prices in Hobart and Darwin have dropped by over 2.5%. In some suburbs, apartment prices have risen significantly. For example, in Sydney, apartment prices in Little Bay, Centennial Park, and Bellevue Hill went up by 8.8%, 8.2%, and 7.6% respectively in the last 3 months alone. Similar increases have happened in suburbs such as Perth, Melbourne, and Brisbane. However, buying an apartment instead of a house can save buyers a lot of money in major capital cities, which highlights the value of apartments in the current housing affordability crisis. And whilst the continuous rise in Australia's population growth due to natural growth and immigration can offer both benefits and difficulties in planning and providing housing, by analysing the present patterns of population growth and available housing supply, we can gain some insights into the factors that might shape the Australian housing situation. According to the Australian Bureau of Statistics national population estimates, the population of Australia increased from 24.1 million in June of 2016 to 25.9 million in June of 2022. This represented an annual increase of 1.7%. Future estimates suggest a rise of a further 2 million occupants in the next 5 years. Growing population numbers indicate a surge in housing requirements and the creation of new housing, whether it be for young adults moving out of their parents' home, newlyweds, or individuals locating to new areas. Data sets like the Australian Bureau of Statistics Household and Family Projections and the 2021 Australian Bureau of Statistics Census are helpful to identify the number of households. Current data suggests that the total number of households in 2022 was approximately 9.9 million. Residential properties are tied to the number of households. Changes in household numbers influence the demand and supply for housing, which tends to affect affordability and availability of unoccupied properties. Australian Bureau of Statistics data estimated that there was around 10.8 million housing units in June 2022, an increase of over 1 million units since June 2016. However, the growth has slowed during the pandemic due to labour shortages in construction, slowing the construction of new housing units. Despite a surplus of 921 housing units in June, a housing crisis persists. This is due to misalignment in the supply and demand of housing, the types of housing available, and the geographical distribution. The significant imbalance in housing availability and affordability vary by location. This discrepancy worsens the housing crisis, even though there is overall surplus of houses nationwide. Taking a deeper look into the housing condition in individual cities can provide important insights. For instance, Melbourne housing market is relatively balanced, while Sydney has a shortage of houses in the outer areas. Darwin is experiencing a severe housing crisis, with nearly half of its suburbs lacking sufficient housing. The data highlights the diverse housing needs across different cities, emphasizing the importance of tailoring housing development plans based on population trends, household types, and local needs. Considering the average Australian household consists of 2.5 people, a population growth of 2 million people over the next 5 years would create approximately 800,000 additional households. Projections using ABS building activity data suggest that about 780,000 households could be potentially accommodated over the next 5 years, indicating a healthy trend in housing construction and a promising increase in housing supply. However, we must also work towards leveraging the surplus housing effective to address the housing difficulty. Surplus houses could be used for affordable housing programs or rental assistance centers to help low-income families and those struggling to afford housing. Regulatory measures such as limiting short-term rentals could help bring underutilized properties back into the housing market. Alternatively, surplus housing could be used for co-living spaces and shared housing or community centers. And remember to like, share, and subscribe to stay informed with the latest property and finance news. Effectively tackling these challenges requires a balanced mix of housing options and ensuring affordability. With careful planning and proactive steps, these challenges can be turned into growth opportunities. By aligning housing policies, city planning, and infrastructure development, we can foster a thriving and inclusive housing market. Here at Hunter Galloway, we're mortgage brokers and can help if you're needing assistance with buying, upgrading, investing, or refinancing. We're a mortgage broker that deal with people Australia-wide. So get in touch with us at huntergalloway.com.au. You can fill in a contact form and we'll give you a buzz, or call us directly on 1300 088 065. And guys, as always, thanks for watching. We'll see you next time.